Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
And welcome. Time for the Financial Survival Network. It's Kerry, Lutz. It is December 8th, 2014. It's Monday. That means it's Manipulation Monday, and it's time for Andrew Hoffman. Andy, how are you?
Oh, I'm great as I watch oil at $63 a barrel en route to the 2008 lows. You heard it here first. The 2008 lows are going to be hit in oil. I don't care how much money they print. Because the Saudi Arabia has declared war on all of the high production cost producers around the world, particularly the shale producers. And the saddest thing of all is the only reason that the shale boom ever happened was because the Fed lowered rates to zero and created a frenzy of bad lending at low interest rates. It is incredible when you see that the high yield index of the United States is comprised 15% of energy-related junk bonds, mostly in the shale industry. $210 billion of shale-related junk bonds. And if you look at what's going on in them right now, freefall doesn't justify how bad things are. We're talking about they are moving right now like Fannie Mae, like Bear Stearns, like Lehman Brothers en route to zero.
Yeah, that's pretty amazing. I mean, who would think that was possible? I mean, there's so much energy flowing from the shale boom, 3 to 5 million barrels a day, all the natural gas. And are they just going to shut the wells down? Well, they're not going to shut the wells down, but they're going to stop drilling, obviously, right?
Well, yeah, they'll milk it as long as they can. They'll, and that's the horrible part about the whole energy thing is that the smart thing is to shut in. But if you have a cash flow issue, you can't shut in. And that's part of the reason that the mining companies don't stop too. Yes, First Majestic stopped a tiny bit of production to make a statement because they happen to have enough cash to survive a tiny bit. But when the rest of the industry is collapsing. I mean, literally collapsing. Have you seen the mining stocks? I mean, they're on the verge of bankruptcy, all of them. And so they can't stop. And it's the same thing with the shale producers. They're going to keep producing and producing and producing until there's no more money in the bank, which is going to be very soon. And remember, when you look at the sheer numbers of energy, again, created around the world by cheap money, this would never have happened if it weren't for the zero interest rate policy that's created all these horrible borrowings, to unstable subprime borrowers. When you look at the fact that the S&P 500, a third of all the capital spending is energy. A third of it. And the scary part was it was in secular decline before this fall when oil was $100 a barrel because people can't find anything anymore at the current prices. It's just not possible. Believe me, I worked 10 years in the energy industry. That's when deep water oil came into being. Now deep water is one of the most expensive, difficult places to find oil. So again, I see this morning, ConocoPhillips just cut their capex by 20%. I mean, when I was at Solomon for 7 years, Solomon Smith Barney, the thing that made us famous was our biannual E&P spending survey, where we call all the oil companies around the world twice a year and ask them how much they're going to spend. And right now, per with this announcement from Conoco this morning, this is when they're all coming out with their 2015 estimates, down 20% for one of the largest companies in the world. Do you know what that portends? If a third of the S&P 500 spending is going to fall by 20% next year, and heck, we're just in the early stages. We're at $63 in oil. What if we're at $40 in oil? It could easily happen. And so, when you see how the powers that be have kept the stock market up with their crazy, algorithms, and you realize just how overvalued it is on every metric, it is just catastrophic what is coming next. It's either a hyperinflation or a 2008 style crash. And either way, there's only going to be one asset that's going to survive, except this time around, there's not going to be any of it left. And I think you know what I'm talking about.
Yeah, it sounds pretty scary. So what are the powers that be? What are they going to do here, Andy? I mean, are they just going to sit back and watch it happen?
They're going to milk it to the end. I mean, it's the same. They're in the same position as an oil producer, just like a shale producer that owes money on its junk bonds can't stop drilling. A central bank that needs to keep stock and bond prices at record levels must keep printing money. And again, we saw the Swiss no vote, called by manipulation or otherwise. I mean, they clearly, I don't mean rig the vote necessarily by changing the amount of votes, but by the massive amount of propaganda and this massive, obviously, they were aided by the Federal Reserve in smashing gold right up into the last day ahead of it. And pushing, you remember, stock market in the middle of October was crashing. And then they created the biggest stock surge in history, 86 days above the 5-day moving average, right ahead of this vote. It was that they were that desperate to get this done. And now, and they failed, and they succeeded in getting the Swiss to commit to the printing press. And now, this coming weekend, you have Shinzo Abe called the snap election in Japan, to get a vote of confidence in his policies. And apparently he's going to win. Are you kidding me? I mean, I wrote today, my article today, it'll be up tomorrow. It's called Lemmings for the Ages, because people are just, following the stock market, not even the average person who's not in the stock market, just saying, well, the stock market's going up, so let's vote against the Swiss referendum, or let's vote for Shinzo Abe. Is anyone looking at what's going on in Japan? I mean, they are in the worst recession of all their two lost decades. They have the highest CPI in years and years and years, and the money supply is going off. The yen is down 45% and plummeting. I mean, and they are going to say yes to this. So again, I mean, we're in the final stages of the Ponzi scheme, and unless a black swan just destroys everything all at once, which with what's going on oil prices could happen at any day, it's going to be when Janet Yellen is forced to, say considerable time means forever. And we are, in fact, QE to infinity. Then there'll be no stopping the belief in what's really, really going to happen.
Yeah. So what about the last week's job report? Looked really great, didn't it, on the surface?
No, it didn't look good on the surface. In fact, my article that's out today is called "All Economic Data Are Lies." And of course, I'm not just talking about U.S. data. I'm talking about the Chinese data, like saying that consistently they're growing 7.5% a year, when everything, including their PMI diffusion indices, are negative territory. They have a historic collapse in commodity prices and real estate prices, and they claim that they're up 7.5% a year. And on top of that, they're lowering interest rates like crazy and buying their own stocks. It's just insane. But as for the NFP report, I mean, whatever the agenda is, whether the agenda is somehow to if they figure, well, if we can keep the stock market up and put out a BS report like that, maybe at next week's end of the year FOMC meeting, we could take that considerable time language out of our, but they can't. They can't even do that. It's just so insane. That report, 321,000. Even ADP, which has done everything in their power to try to match their algorithms to the Fed, couldn't do that. ADP, 2 days earlier, put out their worst November report since 2008, meaning the biggest decline from October since 2008. Today, the U.S.'s own labor market indicator index fell sharply. Jobless claims have been going up. Even in the PMI and all those diffusion indices, the employment numbers, the components have been going down. And of course, look what's going on in the real world. Look at the retail cataclysm for Black Friday weekend. And they're telling us that there's all these jobs. In fact, what I've been reading is they are now actually counting the jobs, like hiring a UPS driver for 6 weeks for Christmas, as a job.
Yeah.
And you know that they're not going to turn it around seasonally the next time around. It's really amazing. Even this particular month, for the first time ever, November turned out to be a positive birth-death model adjustment. It's always a negative one in November, but amazingly, the BLS turned it into a positive. So there was obviously an agenda, but if you look behind the numbers, you see the labor participation rate again fell to nearly a 36-year low. The unemployment rate didn't even go down with this 320,000 jobs. The household survey that goes along with it showed a net decline in jobs and a massive decline in full-time jobs, which has been a secular trend forever. And of course, all the jobs that were there were, as usual, retail and bartenders, et cetera. And frankly, even on that, does anyone really believe that there's massive retail jobs? Did anyone see that McDonald's today reported its lowest sales in 12 years? It was down 5% month over month. Walmart has been saying the same thing. Amazon.com, eBay, all the retailers in Black Friday, all the restaurants, these mid-level chains like the Red Lobsters and the Olive Gardens. But we're to believe that there's this massive growth in admittedly crappy part-time minimum wage paying jobs in the retail sector. in the article, economic data are all lies. They literally now are making this BS up. There is not a single shred of anything that comes out. I mean, you know what came out at the same time as the NFP data? A massive expansion of the trade deficit, negative factory orders numbers, and massive contraction of consumer credit. I mean, across the board, the only thing on this, quote, island of lies, as I call it, that ever goes up are employment. And you look at the numbers, and they're just plain old BS. There is nothing about those numbers that reflects reality, and everyone knows it. And if it was so good, how come interest rates keep plummeting? Look at it today. You know, the so-called surge in rates on Friday, already plunging. And my God, I can't even tell you. I mean, I wrote my audioblog this weekend, was called Crashing Currencies and Oil, the America's Death Knell. I can't even underscore how horrific it will be, what the oil price at $60, let alone if it goes lower, will be to the global economy. Heck, to the Saudi economy based on their socialist budget at $100 a barrel. I mean, we are headlong crashing into a wall at speeds never before seen in history.
Well, on the bright note, Andy, I filled up my tank this weekend with $40 worth of deflationary gasoline. So, hey, there is a bright side to it, right? A little bit?
Yeah, except that people didn't shop. They didn't take their cars anywhere to go shopping. You know, I mean, I did an article maybe 6 or 8 weeks ago, I can't remember, showing the budget of the average American with the average median income, showing that they have a major deficit and need to borrow money. And you look on their budget, I'm putting all the line items, and oil, yes, it's nice, but it's not that big a part of a budget. It's probably 5% of a household budget. I didn't see my health insurance premiums go down. I'm in the supermarket. I don't see the price of food going down. I don't see the cost of education going down, as if education is going to help anyone. That's going to be the next industry that goes into collapse. You think the energy industry collapse is going to be bad? Wait till all these private colleges go out of business because there's no use for them and no one could afford them anymore. So yes, there'll be deflation in that business too. And I really don't think that the MSM or Wall Street's going to be able to convince the world that crashing tuitions is good for the economy.
Mm-hmm. Yeah. I don't see it either. But, you know, everybody's a little happy when they go to fill their tanks, but you're not really looking at the overall impact on the economy when you fill up your tank, you know.
But are they really happy? I mean, yes, it's better to spend $20 on gas than it is to spend $30 on gas. But people know why it's happening. It's accompanying other bad things. The reason why it's costing less to buy oil is because there's less jobs, not what the NFP reports, what the real unemployment report is, because the real median income is at a multi-decade low, because it's as hopeless as it's ever been to get a good job, because home ownership and family creation are at multi-decade lows. That's why the price of oil is down. It's not a good thing. I mean, yes, it is good to pay less than more for gas, but it accompanies so much. And that's why when I wrote 2 months ago, I wrote crashing oil prices portend unspeakable horrors. There were, to say that that's a positive. I mean, the amount of positive, it's kind of like when they say, like with 9/11, after that, you're like, well, you can fly. There's less people on airplanes now, so you have less traffic to the airport. Yeah, but everyone's terrified of dying. So yes, there is a positive impact of lower gas prices, but it is absolutely dwarfed by the vast negatives. Think about just ConocoPhillips, a 20% cut in capex by one of the largest oil companies in the world. How many jobs that means? I read today, BP, one of the biggest oil companies, are already starting to lay off people. We're talking about hundreds of thousands of jobs worldwide, starting with the shale industry here that are going to be lost. And remember, there was only 2 industries in this entire country that were actually positive businesses for GDP in the last 2 or 3 years. One, of course, was high-end real estate, care of the Fed creating a real estate bubble in San Francisco and other high-end markets. And the other was shale oil, because the Fed caused all this high-yield financing of this high-cost oil. Both of those are in dramatic decline right now. There is nothing left in this country that is a positive GDP. And that's why when you see them predicting, again, 3% GDP growth, and they're always predicting and it goes down, you go, what exactly could someone be looking at unless, as I said, all economic data are lies?
Yeah, well, we know that. If you've been listening to the show for a week or two, you know that you can't believe a word that the government is telling you about the economy. And you just have to look next door, across the street, across the hallway, if you're in an apartment building, all of the people that stay home, that don't leave the house all day to go out to work. I mean, there's no question that, and Andy, how many times have we talked about it in your area in Colorado there? You've got neighbors that don't work, right?
Everyone does. And again, Colorado, you know what a big business out in Colorado is? Energy and fracking. I mean, it's in our local newspapers every day. I see the rigs everywhere around my house, and they're talking about should they ban it or not ban it. I mean, it's catastrophic for my area. It's catastrophic for a lot of areas. I mean, my God, and everyone likes to talk about Texas. Oh, it's so independent, blah, blah, blah. Texas is one of the worst run states in the union. It has among the most debt. It's been run into the ground. And you talk about a place that's going to crash. Everyone, yes, they may want to be independent one day because they have oil. But there is no state, I mean, aside from New York with its, all its Wall Street ready to crash, no state is going to suffer more than Texas, which most people think is the most self-sufficient, best state.
Yeah. Well, that's the thing about economic prosperity, even when it's localized, is that it covers up so many bad decisions, so much incompetent leadership at the local level, whether it's in your town, whether it's in your state. And
or
like
Rick
you said,
Perry. I mean, you can actually make a guy like Rick Perry look good because oil is $110 a barrel and there's revenues coming in for stuff he had nothing to do with. But, now people realize what Rick Perry and the rest of these guys from the Bushes on down have done to their state by leveraging, again, low interest rates, promiscuous financing practices. And the next thing you know, the biggest boon in the country turns into the biggest bust.
Mm-hmm. Yeah. And it's inevitable. And Rick Perry got out of there at exactly the right moment, didn't he?
Yeah, just like Greenspan did. So he can say that you should buy gold. And, I don't know how the gods allowed Bernanke to get out of there in time, but it's going to be Janet Yellen, the career government. And Bernanke was a career, academian. She's a career government person. So it's fitting that the career government person is the one who's there at the very end.
So the moral of the story is always leave at the top, close to the top, because then, right? I mean, you leave at the top and people think you're a genius. You leave at the bottom and they think you're a moron, even though you have to engage in crisis management and really have to get things done. But
And no one ever willfully leaves at the top. That's just human nature. You buy high and you sell low. And that's why, today's article, which is called Lemmings for the Ages, is saying, the fact that people would vote against the Swiss referendum or that the Japanese are going to vote for Shinzo Abe after two tries. This is his second try as prime minister where he failed to save the economy with money printing. Shows you just how blinded people have become by watching the stock market be held up by the way, in Japan, the Bank of Japan, who says we buy stocks. I mean, it's just crazy.
But, this is the world we're living in. Yes. And these are the types of things that happen. And, it's just an insane world. And we're going to continue to see more of it here, Andy, until the whole thing blows up, right?
It is, again, for the millionth time. Fiat currency, by definition, is a Ponzi scheme because it must keep expanding at a faster rate. It's kind of like a drug addict who must get bigger doses just to keep from dropping dead. It's the exact same thing. It can never end. And that's why, as I've been saying all along, interest rates are going to zero because everyone is front running the Fed and all the central banks, knowing very well that they are going to QE to infinity and take the rates down on bonds and sovereign bonds. Italy just got downgraded to a notch above junk on Friday. And it's trading at a 10-year yield under 2% because everyone knows the ECB is going to monetize all their bonds. And again, all money managers, they have to be long. They're in business to be long. They don't care that it's ultimately going to be hyperinflationary. They figure, look, when it's hyperinflationary, we all lose money. That's the end of the game. My job is to own stuff. And since the Fed and the Bank of England and all these guys are telling me that they're going to monetize everything, I'm going to buy stocks. I'm going to buy bonds. I'm going to buy everything until the system collapses. And the sad thing is, the ones that are still around, because as we know, most hedge funds are out of business because they haven't figured out how this game works. The ones that are still around, I think some of them actually believe this stuff. They actually believe it might work. And that if Alibaba goes to a $300 billion market cap, which is where it is right now, that somehow that means that the economy is expanding. Can you imagine? $300 billion for Alibaba. I don't know what more I could say to make people realize what a bubble the entire world has been created by these central banks.
Yeah, and that's a fair, Andy. That's a fair valuation, if you ask me.
Yeah, that's fair valuation in the hyperinflated dollars that are coming. It'll be $300 quadrillion.
God, yeah, like where do they think this stuff up? I mean, how do they come up with it and look you straight in the eye and tell you this? You know, it's freaking amazing, and they'll keep telling you this until like the band plays on, like the Titanic. It's sinking, but don't run for the lifeboats yet, right?
Well, it's like, Richard Russell says, and I don't know how old he is now, 91, 92. And he says, people say, why do you keep writing? And he says, because I want to see how it turns out. I mean, when you've been there from basically the beginning in the 1950s of this whole age of industrial growth, and of course the entire fiat currency regime, which started partially in the 40s and completely in the 70s, and you want to see what the most spectacular crash of all time looks like. I mean, we don't really want to see it. We don't want it to happen.
No, but
from a financial analyst standpoint, damn right I want to see how it turns out, and I just hope that I'm not the collateral damage.
Well, we're all going to be collateral damage to some extent. But buying gold and silver, you can at least minimize some of the damage, right?
Yeah, and you may well be one of the more prosperous people in the world if you survive it, because everything is going to go, everything. And it's going to start, you're seeing it. We've been talking about how it's Main Street that's going first. I mean, Main Street has been dead for years. But now when you see the reality of the entire energy industry of the world collapsing, and believe me, I saw it. I saw it personally. I was an oil analyst for 10 years. I saw when oil prices hit $10 for just maybe 6 months in 1998, 1999. The entire industry contracted. Mobil and Exxon merged. Texaco and Chevron, Conoco and Phillips, Atlantic Richfield, Arco, what was the other one? And BP and Amoco. They all got together because they were terrified. The same thing is going to happen today, except on top of that, this entire shale industry. And now you've had all this spending from socialistic spending from the OPEC producers. That means that they are going to have to dramatically cut back on their budgets. I mean, it's just cataclysmic to see what's going to happen to Main Street and how the powers that be will try to keep Wall Street from collapsing with it. I don't think they can do it. And they're certainly not going to be able to keep people out of gold and silver when, look, it's December 8th or whatever. The numbers are coming in. 2014 will exceed 2013's record demand, physical demand for gold and silver. And again, silver down 35% last year, 20% this year, with record demand last year, record demand this year. Supply is about to utterly collapse. I mean, my God, I think, per our webinar panel that we did a few months ago, we think silver production could fall up to 50% in the next 3 to 5 years at the current prices. And just you wait till year end, it's only a few weeks away, when the mining companies start to do their capex budgets for next year, and they do their annual reserve revisions, et cetera, it's going to be a bloodbath. Like in The Shining, it's going to be that bad.
The Shining, yeah, one of my favorite movies. Hey, so look, find Andy's work over at milesfranklin.com along with his associate Bill Halter. I think it's must reading. I read it every day or as close to every day as I can. And go over to financialsurvivalnetwork.com, sign up for our newsletter, and stay tuned for our latest webinar. You want to support the show, clubfsn.com. And you're going to have to wait till next Monday, next Manipulation Monday. There'll be more. Don't you worry about it. Andy, we will talk to you then. Have a great week ahead.
You too.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.